Hi guys, and welcome to this lecture where we will be dealing with the relative strength index. The relative strength index is also an oscillator indicator, and we'll find it obviously under the oscillators, and we just move down and we find it over here. If you're struggling to see the full name, simply click and expand this box, and there we go, relative strength index. Click, drag it onto the price action chart. We can see that it gives us preset levels of 20, 80, 30 and 70. We keep it like that, no problem with it whatsoever, and we just hit. You can add, by the way, you can add, for example, a 10%, just hit enter and there it is. You can add, for example, a 90%, enter, and there it is. I am very happy with the levels as they are, so I'm just going to delete the 90% and I'm going to delete the 10%, and I'm just going to keep it as it comes by default. Hit OK, and voila. Here we are, we have our indicator below our price action chart. What is the relative strength index? Very simply, it's self-explanatory. It shows us the strength of a trend in the market. Where we have our relative strength index dipping to the 30%, dipping to the 20%, or extending to the 70% or the 80% or even above, we can see that when it dips below, that the trend isn't really all that strong. There isn't a lot of momentum in that period of trading on this instrument. When it extends above the 70 and 80%, we know that there's a lot of momentum, there's a lot of trading happening, and that the trend strength is quite high. I'm just going to mark out a few points, guys. Dealing with the relative strength index is a very, very short lecture because it is so self-explanatory. Again, I'm going to just mark out a few points. Here we have a point in the relative strength index that is way above the 80%, approaching even the 100%. Going to draw a line in over there, extend it into the price action chart area. Going to select a low over here, and let's see if we can just extend it into both. No, it won't. So going to just draw in another line in the same position, and here we also have an area above the 80% level. Extend that into the price action chart. Select the vertical line, not the horizontal line, you fool. Vertical line at this point over here. Extend that. You can see that I'm just marking out the low points and the high points in the relative strength index, and then extending them into the price chart area as I go along, into the price action area as I go along. And we mark out this point over here. We mark out this low point over here, and let's jump right into what the relative strength index is actually telling us, looking at these points that we marked out. Now, when the relative strength index forms a high point and it starts forming a curve downwards, it simply means that the trend strength is decreasing. The volume of trading is decreasing. We can expect the trend to slow down. And that is exactly what happened over here. We can see there wasn't much movement. Considering that we're looking at the 4-hour chart, it is quite a considerable period of time where there wasn't much price action in the market. The price remained relatively stable. And then we got to this point over here, which I'm going to quickly just mark out, where we had the opposite. We had a very weak trend strength around the 30%, which then also formed a curve, curving back up, indicating to us that the trend strength might be picking up again. And that is what happened. We can see that this weak trend over here ended. The trend picked up speed again, it picked up volume again, and it pushed up quite nicely. And similarly, over here, we had a bit of a warning. Something saying to us, be on the lookout. There might be a correction coming. There might be a trend change coming. Just be on the lookout. Be on the safe side. And as we can see, the trend strength dropped off again and turned around again. And yet again, when it turned around over here, in this area over here, voila, bam, a very strong trend upwards. Here we had the relative strength index, which is just referred to as RSI. We had it kind of wavering in a neutral area between the 70 and the 30. You'll often hear traders saying the RSI is neutral. That is what they are referring to as this kind of movement within the 30 level down here and the 70 level up there. When we look at peaks in the RSI and troughs in the RSI, when they form within the 30 to 70 area, within the neutral area, they don't carry a lot of strength. They don't really tell us anything. And we can see it quite clearly from this period of trading over here, where the RSI just hovered around within the 30 to 70 area on the RSI. We didn't have much price action movement. The market was in a range, it wasn't really going anywhere. And then we had a break out of there, and we had a dip right down to the 20% area over here, which I'm going to just mark out to be a little bit clearer for you guys. We had the curve at the 20% area, indicating to us that there might now be a stronger trend coming up, and indeed that is what we had. If we look at that period that followed this trough that formed at the 20% area, we had a stronger movement in the market again. And similarly over here, it was an early warning for us that this trend, remember, it refers to the current trend in place. That's very important. When there is currently a bullish trend in place and the RSI is weakening, the strength index is weakening like it's doing over here, it's telling us that the trend itself is weakening, the momentum is decreasing, and it's an early warning that the trend might not continue for a certain period in the future. It might be a market correction before the trend continues again, or it might be a trend change. It's again, just like with every other trend following indicator, it is an early warning. It is not a guarantee. It's just flashing you a red light saying, be on the lookout. So if you entered the trade down here, when you got that signal from the RSI that there is a weakening in the strength of this trend over here, this movement over here, you might have seen that as an opportunity to take profit. Rather be on the safe side, take profit, exit the market, and wait for your next entry point. I specifically marked out this low in the RSI over here. We can see that it dipped down all the way down to very close to the 0 point of the RSI over there, indicating that this trend strength has now become really, really weak, and that something big might be coming up. And we had this curve over here. The strength of the trend indeed did weaken, and we had a trend change over here. Now that the relative strength index is no longer referring to this bearish price action over here, it is now referring to the change in direction. In other words, it is now referring to the bullish trend. And it's telling us that this trend change over here coincides with vigorous trading, creating volume, creating momentum. And indeed, that is exactly what happened. Look at that, all the way up. And the trend strength in this period remained very, very high until it started dipping down, and we had this weakening, this market correction. Trend strength picked up again, indicating that the correction might now be over and that the original trend might be continuing. A recap, quick recap. Relative Strength Index, or RSI, shows us how vigorous the trading on a specific instrument is. In this case, the forex pair euro US dollar, and we're looking at the 4-hour chart with each candle representing a trading period of 4 hours, indicating to us the momentum, the volume, the trend, velocity happening, or the trend, the trading, the vigorousness of the trading happening, indicating to us possible points where the market might retrace or correct, and possible points where the market might continue its original trend, because we can see all the way through, all the way from here, all the way up to here, the market remained in a bullish trend. But there were certain points where the strength indicator, the RSI indicator, showed us and warned us that this trend might be weakening. Now, that doesn't necessarily mean that there's a trend change. It doesn't necessarily mean that the market is now going to go bullish. It could mean, and usually does mean, that the market is going into a period of correction, like we had over here. For this period of time, the market was indeed trading in a bearish direction, but it wasn't a trend change. It was a correction, after which the market continued its bullish price action. Now, you have to view this lecture in conjunction with all of the other lectures. I always say, and I cannot say this enough, guys, just like with any other indicator, you cannot use the RSI as your one and only indicator on which you base your trading decisions, on which you decide where to enter and where to exit the market, or indeed where to place your stop losses. It merely shows you the strength of a trend, and you have to use it in conjunction with other indicators, with candlestick formations, in order to determine whether you should be trading or not. And if you decide that you should be trading, where should your target be? Where should your stop loss be? What your lot size should be? And that is the RSI, guys. Very simple. Simply indicates the strength of the trend at any given time. And just to reiterate, we have our 0 percentage where the trend strength is just dead. There's very little trading happening. We have our 20%, which also indicates a very, very low point, like it does over there, where the trend strength has become very low. In this case, the correction direction over here. The strength of this movement over here has dipped down, it has decreased, and there might be a change. When the change happened, we saw that the trend strength picked up, crossed over the 70%, into the 80%, and even above the 80%. Now, if you want to use the RSI in conjunction with your other indicators, like you should wait for the RSI to dip at least below the 30% before you start thinking that there might be a change in direction coming up. If it dips below the 20%, that possibility increases. So you might then be looking at an opportunity in the future to go bullish. Similarly, when the RSI again dips below the 70%, that might be then an early warning for you to exit your bullish trade and take your profit. Do not use it on its own. Always use it in conjunction with other indicators. I hope you found this lecture helpful and understandable. And guys, I really look forward to welcoming you to our next lecture. And as always, trade safe.